The week is about to close in a rather dramatic way, yet the US employment report and Canada's employment data, both being for November, are still to be released and maybe the ones actually adding the punchline. The coming week, on the monetary level, we highlight the reduced number of Fed policymakers who are scheduled to make statements, allowing thus for the market to form its own conclusions before the Fed's interest rate decision on the 14th of the month. RBA's and BOC's interest rate decisions on Tuesday and Wednesday respectively could come under the microscope of traders, while a number of policymakers from various central banks are expected to keep the market's interest alive. As for financial releases, we may get started on Monday with the release of Turkey's CPI rates for November, Eurozone Sendex index for December, and from the US we get the factory orders for October and the ISM non-manufacturing PMI figure for November. On Tuesday, we get Germany's industrial orders and Canada's trade data, both being for October, while on Wednesday we get Australia's GDP rate for Q3, China's trade data for November, Germany's industrial output for October, UK's Halifax house prices for November, Sweden's GDP rate for October, and Eurozone's revised GDP rate for Q3. Finally, on Thursday, we get Japan's revised GDP rate for Q3, Australia's trade data for October, and the US weekly initial jobless claims figure, while on Friday, we get China's and Norway's inflation metrics, as well as the US PPI rates, all being for November. And from the US, we also note the release of the preliminary University of Michigan Consumer Sentiment Indicator for December. The US dollar was on the rise at the beginning of the week, yet it went downhill after Fed Chairman Powell's speech on Wednesday. Fed Chairman Powell in his speech practically allowed for the possibility of the Fed easing its aggressive hawkish stance by reducing the size of its next rate hike. At the same time, the Fed Chairman also signaled that the terminal rate may be higher than foreshadowed by the bank's policymakers in September, and also highlighted that borrowing costs are to remain high and at a restricted level for some time in order to curb inflation in the US economy. Overall, the comments made by Fed Chairman Powell tended to cement the market's expectations for a slower rate hike path. Yet, Powell's comments allowed for a hint that the Fed Chairman still expects that a soft landing may just be possible for the US economy, yet should high rates dominate over the US economy for a longer period, that could have an adverse effect on the US economy, thus driving it to a deeper and prolonged recession. The pound is about to end its fourth week in a row stronger against the US dollar and is winning ground against the euro as well, but is losing ground against the JPY. On a monetary level, BOE chief strategist Hugh Pill's comment made headlines as the BOE expects headline inflation to drop in the second half of next year, in fact quite rapidly, but dependent on a possible drop of gas prices. Overall, the bank's determination seems to remain intact, allowing for the hawkish approach to be maintained, which could support the pound. On a macroeconomic level, we note that the nationwide house prices for November showed an even wider contraction than in October, which could be a result of the lack of demand currently in play caused by BOE's monetary policy tightening. Next week, we note the release of the Halifax house prices for November, yet other than that, it's expected to be a rather easygoing week, allowing for fundamentals to take over for pound traders. JPY is about to end the week strong against the US dollar, the euro and the pound, in a sign of wider strength for the yen. It should be noted that the recent drop of US yields may have provided the necessary wings for JPY to rise higher. On a macroeconomic level, we note the acceleration of Tokyo's inflation rates beyond market expectations, a tendency that may feed inflation at the nationwide level as well for the month of November. On a monetary level, we note the recent comments from BOJ officials for a possible preemptive strike withdrawing monetary stimulus. Yet at this point, we would also add that any idea of the bank changing its ultra-loose monetary policy settings may be premature. It's characteristic of the results of BOJ's insistence on low yields and rates that the bank is in a loss-making position for the first time in decades, according to reports. On a more fundamental level, we note that the safe haven status for the Japanese currency is still present, albeit pretty neglected in the past few months, and an improvement of the market sentiment could weaken JPY. The euro is about to end the week in the greens against the US dollar, yet is losing ground against the pound and JPY. On a monetary level, we note that ECB President Christine Lagarde stated that inflation hasn't peaked yet, which could be a surprise for the markets, and the speech tended to hint toward more rate hikes to come from the bank. In a more aggressive tone, Germany's Bundesbank President Nagel highlighted the necessity for monetary policy to drive inflation lower. Yet, on a macroeconomic level, we note that Eurozone's preliminary HIC period for November slowed down more than expected as market expectations that inflation has peaked and is now on the retreat in the area seem to intensify. The release tends to ease the pressure on ECB to proceed with another jumbo rate hike in its next meeting, and thus may restrict any bullish tendencies for the common currency. AUD is about to end the week in the greens against the US dollar. On a monetary level, RBA's interest rate decision on Tuesday stands out. The bank is expected to hike rates by 25 basis points, yet there is still some degree of uncertainty, as RBA Governor Lowe in past statements said that the bank is to examine its interest rate decisions on a case-by-case basis. Should the bank actually proceed with a 25 basis points rate hike and the tone of Governor Lowe's accompanying statement be characterized by a further hesitation, we may see the Aussie weakening. Also, we cannot neglect the recent developments in China, as authorities are reported to ease their strict approach to measures related to COVID. On the other hand, the fact that a new contraction of economic activity in the crucial Chinese manufacturing sector was noted for November is not a positive for the Aussie. We note the release of Australia's and China's trade data next week, yet the main release for Aussie traders is expected to be Australia's GDP rate for Q3 on Wednesday. The CAD is about to end the week slightly lower against the US dollar for a third consecutive week, despite the extensive weakening of the US dollar. It should be noted that on a macroeconomic level, the GDP rate for Q3 exceeded market expectations by reaching 2.9% year-on-year, despite dropping in comparison to Q2. The release was expected to provide some support for the CAD, yet it failed to do so. Similarly, also the rise of oil prices failed to provide the necessary support for the loonie. Oil traders are expected to keep a close eye on the release of OPEC's decision over the weekend, and should the Oil Producers Organization announce that it plans to cut production levels, we may see oil's price jumping and in turn spurring CAD bulls. On the monetary front, we highlight the release of BOC's interest rate decision on Wednesday. The bank is widely expected to hike rates by 25 basis points. Should the bank also accompany the decision with a confident hawkish tone, we may see the CAD getting some support, otherwise the CAD may be allowed to continue its retreat. Given the even lower number of high-impact financial releases stemming from the US and the fewer Fed policymakers scheduled to make statements in the coming week, we expect the US dollar to relent more of the initiative to other currencies in the FX market. Such a development may allow for an even more balanced and diverse blend of trading opportunities for traders. As for US stock markets, we continue to see the potential for further gains despite all major US equities indexes being already in the greens for the week, as the Fed's aggressive hawkish stance seems to be easing and market expectations seem to solidify for a narrower rate hike in the Fed's mid-December meeting. Finally, we are to close this report with a comment about the precious metals price. Gold's price managed to climb above the psychological threshold of $1,800 per ounce for the first time since mid-August, which resulted from its negative correlation with the US dollar. Also, the drop in US yields tended to polish even further the shiny metals appeal. We hope that you found this report useful, and from all of us here at IronFX, best wishes for solid trading.
In our session today, we will talk about what silver is, referring to spot metal tradings, and why investors prefer to trade silver. Silver is a precious metal which over the course of history has been used in the production of jewelry, coins, photography, and electronics. It has also played an important role in both cultural and religious ceremonies, in the form of holy ornaments and other spiritual items. Compared to other precious metals, such as gold, silver is one of the world's most conductive metals, meaning it is highly valuable. While it's not as valuable as gold, it has a lower cost entry compared to the yellow metal. Trading silver for a currency is known as spot metal trading, which refers to the market value or cash price of the metal at the very moment it is traded. This is known as the spot price. Most investors trade precious metals such as silver because it offers the opportunity to diversify their portfolio. They also aim at hedging their positions even when the markets have a downward movement. Thank you for watching. In our next video, we will cover some more interesting facts about silver, including some top tips for trading the precious metal.
Hey guys. Hey, sorry for the technical issue. So we had an issue, but we have managed to fix it. All right. So sorry for the delay. So welcome to another IronFX webinar series. So yeah, today I'll be presenting about the Bollinger Bands and the Donchian channels trading strategy. So you guys have probably heard about the Donchian channels. So it was previously used by the turtle traders. All right, so it was previously used by the turtle traders, where they actually used the Donchian channels and they tried trading. So they actually tried trading back then with the Donchian channels for people who do not have trading experience. So they were doing some kind of experiments, and then the experiment netted good results from people who did not know how to trade, and they were known as the turtle traders. So today we will be learning how to use Bollinger Bands together with the Donchian channels. Later on, when I present, it will kind of look alike, look very, very similar, look the same. Right, just before we begin. So risk warning, our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. So for the disclaimer, just a very, very quick run through. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. So this material is just the personal opinion of the authors and the client's investment objectives, and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained. So redistribution of the material is strictly prohibited. All right, just before we begin, for those who are new here, so my name is Chen Yongjing, and I'm the trade analyst for Everest Fortune Group. So we are actually the finalists for the best Forex research for 2019, 2020, and 2021. We are also the finalists for the best equity research for 2020 and 2021. So now we have a special partnership with IronFX, where we are bringing you guys the good stuff. So yeah, that is me. All right, moving forward. Okay, today we will have a few topics. So the topics are: what are the Bollinger Bands? How do you trade Bollinger Bands? What are Donchian channels? And how do you trade Donchian channels? And how do you combine them together? All right. So what are Bollinger Bands? It's a very, very simple one. It's actually developed by John Bollinger So that's where the name is coming from. So it is actually used for generating oversold or overbought signals. So there are actually 3 lines. The standard Bollinger Band comes with a preset calculation of 2 standard deviations and a 20-period moving average. So when the price touches the upper Bollinger Band, it can indicate an overbought signal, while touching the lower band indicates an oversold signal. So just to have a very quick summary, the Bollinger Bands is a volatility indicator. It indicates how high or low prices can move during any period. When the market is volatile, the bands widen. Conversely, when the market is less volatile, the bands contract. Very, very quick. Very quick one. Just testing the mic. Can you guys hear me? All right, can. Everything's good. All right, moving on. So this is how it actually looks like, the Bollinger Band. All right, so this is how it looks like. There's a tree. There's a 2 preset standard deviations, which is indicated by the blue line, and a 20-period moving average indicated by the orange line. Right, so you can see when the Bollinger Bands go to the top, outside of the area, you can start to take a shot. When it goes above, you can start to take a sell, start to look for sells, which is an overbought signal. So when it's at the bottom, or right here, out of the Bollinger Band, it indicates that it is oversold for price to come back up towards the 20-period moving average. All right. So yeah, any questions so far on the Bollinger Bands? Do let me know in chat. Do let me know before I continue. All right. Quick one. Let us continue. So how do you trade the Bollinger Bands? The first one is called the Bollinger Squeeze, and the next one is the Bollinger Reversal. All right, next. Okay, moving on to the Bollinger Squeeze. So what is a Bollinger Squeeze? A Bollinger Squeeze is identified when the bands contract for a medium time and economic news is to be released on the horizon. It is categorized by a horizontal consolidation of price over a period of time. Typically, the horizontal squeeze can be encompassed within a rectangle, which is shown on the chart right here. So who is that joining? So this indicates the potential for an explosive big move as the price breaks out of the consolidation. All right. Moving on. So sorry, we actually had an issue right there. Okay, this indicates the potential for a big explosive move as the price breaks out of the consolidation right here. Take a look and either look for a buy above the Bollinger Squeeze or take a sell below the Bollinger Squeeze. So what do you do with a Bollinger Squeeze? Because the Bollinger Squeeze occurs just before a news event. So in this situation right here, a news event has occurred. It would be unwise to pick a side for the potential breakouts and gamble on the news results. Therefore, the best way to take advantage of this setup is maximized by deploying pending orders. So all this right here, pending orders. All right, feel free to ask any questions. Feel free to screenshot this down before I continue. All right, when you place a buy stop order slightly above the top, we are talking about the buy right here. Buy stop slightly above the top of the consolidation area. Stop loss should be about 1.5 times the size of the consolidation area, with the take profits at the nearest swing high or 2 times the stop loss amount. For the sell stop area right here, so what you should do is you should place a sell stop slightly below the top of the consolidation area. Stop loss should be about 1.5 times the size of the consolidation area, with the take profit, the TP targets at the nearest swing high, or 2 times the stop loss amount. I mean the nearest swing low, my bad. Right here, nearest swing low. That's what you are targeting. Or this swing high right here. So whenever the buy or sell trade is activated, you must remember to cancel the other pending order, or you could try to find a one cancel other EA. So just remember, breakouts of the consolidation should result in a quick and fast price movement. So if it breaks and climbs slowly, it could be a false break and you would want to get out of the trade quickly. So a trend could be ignored briefly due to the explosive and short-term move, but only briefly. The support and resistance levels are still crucial and must be respected. So this indicator is very effective on Forex, commodity, cryptocurrency, and equity markets. So just remember, use the Bollinger Squeeze only on the M15 or H1 time frame. And remember, it is a relatively rare occurrence. So maybe later on, I can move on to the live charts where I can show you guys more on the Bollinger Squeeze. All right, moving on to the Bollinger Reversal. All right, any questions so far? Do let me know. I'll just I'll just wait for a moment. All right, moving on. So, somebody asked support and resistance. What is a swing high and swing low? Well, that's a very, very good question. So for swing high, it's usually right here. It's right here, the previous swing high, the highest points, the most recent high. And the bottom, it's the swing low. It's the most bottom area, the previous low, the previous pivot. All right, moving on to the Bollinger Reversal. All right, the Bollinger Reversal is my absolute favorite and most valuable perspective of the Bollinger Bands. Have you ever seen the price move strongly in a direction, but the moment you get into a trade, the price reverses almost immediately, or you held on to a profitable trade hoping to hit a take profit level, only to see your profits whittle away as the price reverses? So you can take a look right here. this is reversing all these yellow highlighted areas. Price are reversing back down, and this is reversing back in. So the Bollinger Band can help to prevent FOMO. What is FOMO? It's fear of missing out to a late entry and greed, leading to a late exit. All right. So the Bollinger Band can help prevent. Okay, you look at the yellow spots on the charts. The spots indicate when the prices had traded outside. Let me remove this. Right. We're having some technical issues right here. So you look at the yellow spots on the charts. The spots indicate when the price had traded outside of the second of the standard deviation of the Bollinger Band, either the lower or the upper band. So when the price trades outside of the Bollinger Band, two things are highly likely to happen. The price reverses back before the current candle loses, leading to possibly the development of a pin bar, which usually signals a strong reversal candlestick pattern. So the price closes outside of the Bollinger Band, and the subsequent candle is a very strong retracement. I can see right here. Back towards the moving average, this moving average orange line, and possibly a stronger reversal. All right, the Bollinger reversal can be applied to any time frame, M1 to day 1. All right, so let's give it a moment. Okay, let's give me a moment. We're having some technical difficulties. I'll be right. Okay, let us continue. Okay, the Bollinger reversal can be applied to any time frame, M1 through to D1. When the price is outside of the Bollinger Band, you should choose to avoid entering a trade, as the price is likely to reverse, and if you are currently in a trade, and the price has broken out of the Bollinger Band, you might want to consider securing the profits. However, some more aggressive traders could even choose to trade the short-term reversal. Remember, this is a technical indicator. You shouldn't use technical indicators solely. So you combine it with other forms of analysis, price action, fundamental analysis, sentiment, and other types of indicators. The more confluence you can have, the more confidence you will have. All right, so any questions so far? I'll be right back, give me a moment. I think that's me.
Is he not there? What?
Yeah, he became the co-host. I keep removing his permission.
Which one is you?
Second one is him.
Sorry.
This him. I keep him.
He's host.
Huh?
He's a host.
Are you serious?
Yeah.
Let me be back. Are you serious? He's the host? Yeah, reclaim host high. Hey, hello. Hello. I'm actually doing a session right now. Can you come back in later? I'll just remove you first. Can you come back in later? Sorry.
Okay, sorry. I've been wondering what is happening before. Okay, thank you.
All
Sorry
right.
to disturb.
Oh, it's okay. All right. I'll just remove you for now.
Okay.
Okay. Bye.
Bye.
All right. Sorry for that issue right there. Okay, let us continue. All right, so let's move on to how do you trade a Donchian channel. So actually we have the 22-day moving average and the 55-day settings for the Donchian channels, which are used by the turtle traders. So how do you trade the Donchian channels? So it's actually used for short term. You can actually use for short term or long term for scalps. All right. So looking right here, when the top on the daily for this example, the Euro Swiss franc tapping to the top of the Donchian channels, you can look for a reversal to a downside. Or if you tap into the bottom, you can look for a reversal back to the upside. So it's actually very, very similar to the Bollinger Bands. It looks very, very similar. All right. So over here, there's also a pretty nice reversal, price tapping into the top of the Donchian channels before it reverses back in. So looking at these areas, I'll just start to highlight all these areas out. Nice reversal areas that are occurring when price taps onto the Donchian channels. All right. So yeah, that's about it for the turtle trading. So actually moving on next. So how do we combine them together? So maybe I'll just go to TradingView real quick to show you guys how to use it. All right. Moving on to the charts. All right, so you actually can, let me load out my chart layout first. Right, use this webinar layout. So actually take a look. So take a look right here. This is, let me just hide it first. This is the Bollinger Band. So you are looking when price taps out of the Bollinger Band, you are looking for reversal back to the moving average. So what you can do is maybe if you are in a buy, example, in this specific situation, let's say you are in a buy right there with your stop loss below. So your first take profit targets can be when price taps out of the Bollinger Band, where you can start to expect a reversal. So do remember you can aim for the previous swing high. So that can be a resistance area. Right. Resistance line. So looking back down, looking at this area, you are thinking why price actually reversed back up to the upside. So maybe when we look to the left, there looks to be a possible support area take a look all the way far back. Pretty nice support area that price has tapped. 1 tap, 2 taps, 3 taps, 4 taps. So this is a valid support line. All right, so this is an example. I'll just take for just example of a Bollinger and buy. Right, I'll just screenshot this down and send to chat. Maybe I'll set this to default. All right. So I'll copy link to a chart image and I'll send it right to the chat to everyone. All right, this is the example of a Bollinger Band buy. Okay, moving on next. We have the looking for a sell. For an example of a Bollinger Band sell. All right, let's take a look. So with that, maybe looking at this area, we are looking at the support or this resistance, expecting the resistance to be respected. So maybe right there, we are looking at the, let me change this to a resistance line. So resistance line only. So as usual, we have at least 1 tap, 2 taps, 3 taps, and previously price has been rejecting this area. You can look at that line as a potential reversal resistance line. So when price taps into the resistance one more time and it's outside the Bollinger Band, you can start to look for a sell. So maybe you can look for a sell. This is the use with support and resistance. So maybe want to refine it even further with a strong close. So we have a very, very nice price come back down, forming a market structure shift. So with a market structure shift right there, you are looking to take a short all the way to the next support level. So maybe this can be a proper support level. So we actually have 1 tap, 2 taps, 3 taps. So we can take a short, possible short just because price broke. So you wait for price to retrace back into the Bollinger Band, back to the moving average before you start to look for a short. So let's say you take a short right there, your stop loss slightly above the resistance line, and you'll take profits at the support level. So you can take a look. Actually, it's actually pretty nice. So let me just, screenshot this down, do it properly, draw some circles so you guys can see it clearly. We have the 1 tap, 2 tap, and 3 taps. So same thing right here, 1 tap, 2 taps. And the reversal. So I'll just mark out that line with just write it out nicely. So using a call out, I'll just put this area as a reversal for resistance line. So what you are expecting a reversal on tapping onto resistance line. So also price is outside Bollinger Band. So what does this do? It's looking send over bot signal. All right. I'll just screenshot this down and send it to chat. So I copy link to the chart image. I'll just send it right over. So this is the example of a Bollinger Band sell. All right, any questions so far before we continue? Any questions so far? All right, let us continue. Next, we are looking for the Bollinger squeeze, a possible squeeze. Let me just find it. Let me just find it. So this was a news event. So you can take a look. If I actually draw a rectangle right here, box red. So actually price squeeze within this area, this tiny area before price took a nice long, took a long slightly above, aiming for the next swing high. Take profit slightly above. Stop loss below. So 1 to 1.4. So you can take a sell right here too. All right, moving on. Moving on next to the Donchian channels. So actually, if you go to TradingView, you actually can find out the Donchian channel. So this is how it looks like on TradingView. So yeah, this is on the 15-minute chart. Maybe I'll go to the 1-hour chart. All right. So if you actually go to the indicators, under indicators, if you search Donchian, Donchian. So that is the Donchian channels. So you can actually use that indicator. So you can see when price taps into the top of the Donchian channel area and it starts to reverse back to the downside. Same thing right here. Price is keep tapping at the top and then it reverses back to the downside. Same thing right here. You are looking for a buy back into that area. So let us just have a quick look. Let us find out how we can combine them together. So with the Donchian channels and the Bollinger Bands, combining them together, we are just adding confluences to a trade. So with price out, you can take a look. Price out of the Bollinger Band right here. And also at the top of the Donchian channel. So these two adds confluences to our buyers that price has been overbought. So we are looking for a reversal back to the downside. So maybe what we can do, we can start to look for shorts, maybe in smaller time frame right there. I'll just move on to 15 minutes. It's on the 1 hour. So maybe when price forms a very nice market structure shift right here. Right here, structure shifted, a lower low was formed. This is the lower low formed. So we are looking for price to reverse back down into the Bollinger Band on the 1 hour chart. So you can actually use the smaller time frame for an entry. Short position, price broke, look for retracements, maybe use a Fibonacci line, top to bottom. Or usually you can aim for the 38.2%. So 38.2%, you take a short, stop loss at the very top, and aim for at least 1.15 risk to reward. So when price reaches this area right here, you can possibly look for to take partials. Take partials in your trade. So this area, take first TP, partials. Bottom left. So yeah, please screenshot this down before we continue. Please screenshot this down. I'll just send it to chat. So this is an example. I'll just write this down. What is this? example of Bollinger Glass Donchian sell. So in this specific scenario, I'm making the use of a made use of Fibonacci line, also made use of Fibonacci line, the 38.2% area. All right, and your first take profit should be 1.5, at least 1.5, at least 1.5 is to reward. So you're just looking at this area right here. There's a pretty nice support right here. So that's where you can start to take your partials. So I'll just screenshot this down and send it to chat. All right. So I'll just copy this and I'll send it right to chat. Okay, I think I sent it wrongly. Let me send one more time. Okay. All right, let us continue. Any questions so far before I continue? All right, if no questions, I'll just continue. Next to be Bollinger plus Donchian channel buy. So looking at the 1 hour chart. 1 hour chart. Maybe at this area right here. Maybe just start to look for recent area, price outside. Maybe we can take a look at this area. So let me zoom in. Zoom in, price is outside the Bollinger Band right here. And price is also tapping onto the bottom of the Donchian channel. So maybe moving on to the 15 minutes chart right there. Can look for a possible shift. Let me move back. So yeah, looking at this area, price actually formed a double bottom, a pretty nice double bottom formation before price pushed to the upside. So maybe for this specific scenario, you can draw it out as the, look at this area as the resistance. And over here is the support. Support right there. All right, so with that in mind, you can actually take a long position right up there. Stop loss at the bottom before you aim for price to head to the upside towards the next swing high. So right here is your first take profit, first partial. First TP is your first partial. All right, so let me type it out in chat. So this is a double bottom formation. This is the example of Bollinger Glass Donchian buy. All right, let me just screenshot this and send it to chat. All right, let me send this, send it right there to chat. All right, any questions so far? Do let me know. So it's pretty neat. You are just looking for places where it's overbought, oversold, then you are just using many different types of other confluences, types of trading methods to enter a buy without just sniping. If you are just sniping, it probably won't work that well for you. So yeah. All right. So any more questions before I end this webinar? Any more questions? So yeah, any more questions, do let me know. So yeah, if you have no other further questions, so I would like to thank you guys for joining me in this webinar. So yeah, thank you very much. My name is Chen Yongqing, and really sorry for the technical issue earlier on. So yeah, thank you very much for joining, and stay safe trading. So we actually have the NFP coming up this Friday. All right. Bye guys. Bye-bye. Take care. Take care.